Hey traders, Jason here from Leavitt Brothers. Happy Wednesday. Today I'm going to talk about a couple trade examples. Okay, my style is simple. I find good-looking charts on the daily time frame. I back up and view the weekly, sometimes the monthly, to get an idea what the big picture is. Then I go the other direction and zoom in with an intraday chart, sometimes hourly chart, sometimes 15 minutes, sometimes 5 minutes, to find asymmetrical trades where I'm risking a little to potentially make a lot. I'm more of a swing trader, but in the current market, where the market's just kind of up and down, chopping in a range, it's been like that for a little while. I'll zoom in and do day trades. Why not? So let's go through a couple of my trade examples from the previous week or two. All right, so here's AMD. Okay, this is the monthly chart. So obviously, trend is up. I don't trade off the monthly, but it does give me a good backdrop. It just shows me that the stock is strong. It's trending up. There have been some big moves down, but overall the trend is up. On the daily time frame, stock's kind of a mess. Okay, a lot of gaps, a lot of tails on the candles, complete lack of smooth trading. But I like the stock because you get 50-cent and dollar moves day after day after day, and the volume is gigantic, and the spread is always very small. So a lot of people want to buy the stock at 25 and and ride it to 30. I don't mind buying a stock at 25 and riding it to 26 if volume is really big and I can get in and out really easily and I feel comfortable with a bigger position. So that's why I kind of liked it. The trend is obviously up, although it didn't trade smoothly. So there was the support level here at 27 that got taken out. But as you can see, the stock didn't just collapse. And then another support level was being built here at 26, along with, you see, the 50-day moving average. So I was looking to trade a bounce off of support and the moving average. The 50 was support here. The 50 was kind of support over here. It was resistance over there. I'll mark up the support over here. So I was kind of looking to do business. I was thinking if the market would firm up, then maybe we can get a move from 26 up to 27, maybe 27.5. That's all I was looking for. Nothing big. I'm not looking for a swing trade up into the 30s. I'm just looking for a bounce. Okay, so if I zoom in, and remember here we got a big move up and then we have a gap down and sell off. If I zoom in, this is what I saw. This is the 15-minute chart. So the gap down is this day here, May 13th. So it's going to be this day. Okay, so what happened here is you get a gap down, stock comes down, comes up, comes back down, and then when it goes back up, you get the MACD cross here. Okay, this leads to one of my favorite setups. While the MACD stays in a crossed up mode here, the stock cycles down one more time. Okay, I love this kind of a setup. I like, first move up causes the MAC to cross, and then the next dip, the MAC stays above the signal line, and so it basically says that if this would have come up and then cross back down, I'd remove it from my list. But if it goes up and then the MACD could maintain itself above the signal line, then I'm really interested. So what we got here is we got the move up, we got the move down. We got what I call a kiss and cross, where the MACD comes down, kisses, then moves up, and at the same time we get a cross here with the stochastic. Okay, so again, move up to cause the cross, then one more dip, and you get a kiss from the MACD, and you get a cross from the stochastic, and the stock moves from the low 26s up to 27.3, 27.4. It's a perfect trade. Okay, high volume stock, spread is like a penny or two, so you can feel comfortable getting in with some size. It's a simple day trade, 1 point on a $26 stock. That's perfect in my eyes. All right, next trade. ZS. Okay, strong stock. It had moved up, then moved sideways for a couple months, was getting squeezed by converging trend lines, was getting scooped up by its 50-day moving average. Looked like a breakout trade at 70 for a trade probably up to 80, which is what I was looking for as far as a swing trade, but wanted to zoom in and see if I can get a better entry, okay, which is something I always do. I don't always wait for the breakout. Okay, I look inside the pattern to see if there's a dip I can buy. If I could buy at 68 and then add at 70, it just gives me my risk is a lot lower, that because if the stock goes up to 71, 72 and then comes back down and fails, then my entry is a little bit lower. So love the chart, love the stock, love everything about this. Just want to zoom in and see if I can get a better entry instead of waiting for it to take out 70. So this is what I saw. The day, so let me see here if I can just do, so here's 70. Okay, that was the long-term resistance, or I should say the resistance going back a few weeks. What I saw here is I saw within the pattern, I saw a nice solid resistance level here at 69. The very next day, stock breaks out and just shoots up within 15 minutes. This is the 15-minute chart. Okay, I don't really like to buy stocks in the opening minutes of the day because there's a lot of false moves. Sometimes they gap up and come down. Sometimes they just go up and come right back down. I don't really like to play them. Sometimes I'll chase them a little bit, but for the most part, I'd rather not. Okay, but if you keep watching it, oftentimes later in the day, you get a pullback to a significant moving average. In this case, the 21. Okay, you'll see the 21 is the orange line, and I'll highlight. You can see that it was resistance here, it was resistance here, it was support here, support here, 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 support all along here. So the stock goes up, comes back down, finds a support at the 21, which happens to also be the previous resistance level. So you get an entry in here, and then the stock goes from 69 up to 74 for a nice 5-point trade. They don't all work that well. Okay, sometimes they go a point or two and then they fizzle out. This one I got kind of lucky because it actually went up to the mid 70s and eventually went up to 80 within a few days. Okay, but this is a great example of strong stock on the daily chart. Strong stock doing really well, trading in a clearly definable pattern. Resistance clearly defined. I zoom in with a 15-minute chart. I see a resistance level. I miss the initial move just because it goes so fast, but then I get it on a pullback to a significant moving average. If this comes back down over here and bounces off the 21, there are more entries to be had. But as a day trade, this is as good as it gets for me. Here's Twilio. Again, strong stock, uptrend, kind of a messy, sloppy stock, lots of overlapping candles, lots of long tails, gaps, definitely not a smooth mover. But if you look at the size of some of these candles, I mean, this price interval, like right here, is 250. So every single one of these candles is probably, $3, $4, $5. So that's not bad for $105, $106 stock, in here. All right, so looking over to here, we have a breakout, okay, a close off the high, and the next day it gaps down and sells off. If you play the breakout and it gaps down and starts selling off, you got to get out, okay? They don't all work. It happens. That's trading. That's what we do. The best looking patterns can fail. You just got to get out and, clear your mind and see if something else forms. So when that happened, and I wasn't in this, when it gapped down and did this, I wasn't completely spooked because I noticed that we had a big red candle there and the stock bounced. We had a big red candle there and the stock bounced, $8, $9. We had a big red candle there and that was the bottom. The stock bounced. We had a big red candle there, followed through the next day, but then bounced. Even this big red candle there, that was pretty much the bottom. Okay, so just because we got a big red candle, I was at least curious. It was a strong stock. It was in the software group, which was doing really well. I wanted to see. I thought it still had potential. So I'm going to zoom in with an intraday chart and see if I can find something that gives me a frame of reference. All right, so here's the 5-minute chart. And yes, I do zoom in sometimes with the 5-minute chart just to give me some perspective. So the big down day was this day. Okay, the next day, stock gaps up. I'm not going to just buy because it can gap up and completely sell off and fill the gap. So I'm going to give it some time. So in this case, I gave it time. I gave it about a half an hour. These are 5-minute candles. So, you got about 5-6 candles here, about 25, 30 minutes. You'll notice that it finds support at both the 50 moving average and the 21 EMA. Okay, so the fact that it gaps up to kind of break the downtrend from here and then could hold that level for half an hour and then start to move up, that to me puts it back in play. You could buy this, or if you wait, then an hour later you get a dip back to the 21, which gives you another entry, and the stock moves from 127 up to 130, 131. So 4-point trade for $120 something stock. It's like a three-point move. Not bad. Okay, as a day trading vehicle, this is good to me. Okay, overall the stock's strong. It has a bad day, but then it gaps up, holds the gain for long enough for me to believe that the negativity from the previous day is gone, and then I look for a key moving average on some time frame, 5-minute, 30-minute, 50-minute, to trade against, and to find some sort of asymmetrical trade. In this case, it was the 21 on the 5-minute chart. All right, one more example. Here is VFF, Village Farms. So stock was strong. Obviously, went from $4 up to into the teens. Topped out, broke a support level, but didn't fall apart. Traded in a range for about a month. And you'll notice here, volume completely fell off. So it was a stock that was really hot and then just completely cooled off, and everyone was stopped paying attention to it. Then you get this big update on big volume. So that to me puts it in play. That gets it back on my radar. When I see this, I'm thinking, all right, we got a resistance level here at 13. We got the 50-day moving average at 13, a little bit above. So I'm wondering if this thing's going to trade like sideways for a few days, kind of like this, and then try to break out or something. Okay, so like this big gap up on big volume puts it back in play, and then I'm going to zoom in and see if can I find some sort of can I find a trade? Is there a moving average on a smaller time frame that I can trade against that'll give me a good entry? So I zoom in with the hourly chart. This day here is the big gap up that kind of breaks the funk of this little downtrend sideways moving market. So the next day what happens is you get a gap down, but you get support here at the 21 EMA, and then you get support at the same moving average there. Okay, so this stuff breaks the monotony of the little downtrend sideways movement, puts it in play, and then it looks like the 21 on the hourly chart is acting as support. Okay, so there are entries in here. Stock goes up, comes back down, kind of tests the 21, and moves up again. Okay, to me, this is an ideal setup. You have a stock that was previously strong, fell on hard times, was kind of drifting down and over, breaks out of its funk with a big up day on big volume. Then I zoom in with an hourly chart. I find a moving average that kind of is in sync with the stock, and I trade against that moving average. In this case, we get a move from like 12 up into 14. I mean, that's beautiful. I mean, you get a 2-point move on a $12 stock. If you do that just once a week, you can do this. You can make a living as a trader. Okay, it's not easy. Okay, you're gonna have to get some seat time, get some practice, learn the nuances of trading. But you only need to do this once or twice a week to make a living at this. You don't need 5 to 8 trades or 10 trades or something like that. You just need a simple setup, couple good ones a week, and you're pretty much set. All right, thanks for listening. If you like the video, want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. We're a boutique research firm that's been in business since 2002. We provide market analysis and trading ideas to institutional and individual traders. Again, thanks for listening, and I'll see you next time.